Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at CMG SKX NKE and TWTR heading into Tuesday, January 24th. So liking the bulls candlestick here that formed today on CMG. The bulls bought the dip. We were looking for a bottom fishing play off of the low $400 support range. We bounced off of 402.01. Our stop loss would have been just below $399 if we broke that level. But the channel being set right now is pretty clear. The 100-day moving average support, 200-day resistance, and we have not seen follow through from a bullish reversal candlestick yet after this gap up in consolidation. So the bulls need to confirm this candlestick tomorrow. Clear lower high pattern has been in play now since the breakout. Every single day has been a lower high, and the bulls need to break that. So we're looking for a break of 409.26 tomorrow, and then we'll be right up to this little double top at 411. So keep a close eye on these bulls. They had the volume today. The bulls bought the dip. I am liking the daily chart to favor the bulls if we can break that lower high pattern. On the weekly time frame, back testing and holding the middle Bollinger Band. Inside candlestick last week, inside candlestick again this week. Yet to break, but still maintaining middle Bollinger Band support. SKX, nice follow through. We had the bearish entry from the upper Bollinger Band resistance. Lost the middle Bollinger Band support. Back test and rejected from the middle Bollinger Band support. But the bulls did defend 50-day moving average support today, 24.47. If we lose that level, I'm looking down at the low of this consolidation, 23.96, because we would then still continue to fill the gap, 23.09. If we break that support level, it will be a lower high and then a lower low looking to fill that gap. Weekly time frame for SKX, you can see the bulls have buying the dip the past 2 weeks, trying to maintain that higher low. But if we see a loss of that support, we're going to see a bearish TCG cross of the 4-period and the 8-period exponential moving average, and that will certainly favor the bears to continue filling that gap. So the bears are still in control of SKX, especially as long as the middle Bollinger Band stays resistance. NKE bulls showed up today and closed near the high of the day. So we have a tightening range very clearly. The higher lows, very clear, and now the lower highs as well. So 54.09 and 53.95 are our resistances. Support is 52.16 and 52.72. So we're going to be watching those levels. If we see some follow through for the bulls, again, top fishing play where we would exit if 54.09 were to break. So if you want to make a bearish entry up in the upper $53 range, there's not a ton of risk before you would get stopped out. The weekly time frame shows these tightening ranges. We had multiple inside candlesticks over the past 3 weeks. We did see a break this week, but again, the first trading day of the week is not enough to go off of on these inside candlestick signals. We need to wait until at least 2 days of trading action are factored in. So at this point, it would be a rev strat where we're looking bullish after a bearish break. But again, we need to factor in tomorrow as well when looking at these inside candlesticks on the weekly time frame. So close eye on the tightening range. Don't think we're going to get a clear break until the end of this week at the soonest. But this is one to scout, and if you don't even have a position or are not looking to make a position until the break, definitely keep an eye on it because we're going to see either a clear higher high push or a clear break of this higher low pattern. Twitter bulls are trying to form a bullish reversal candlestick. They've been struggling the past couple of weeks. We defended support 1646 as a double bottom, very clear support level to be watching for the rest of the week. If that level breaks, looks like we filled this gap here at 1645, so the bulls are trying to rally after filling this gap. Resistance is 1681, and then the middle Bollinger Band on the daily 1685. That's going to be right around 1681 tomorrow as well. So just like NKE is a potential top fishing play, we've got Twitter here as a potential bottom fishing play if you were trying to play it bullish and see some follow through. Again, wouldn't take a ton of risk if you would get stopped out as soon as 1646 were to break. Weekly time frame, we can see the little bounce attempt, weak, and I certainly wouldn't be looking for anything more than a short term, perhaps even just a day trade bull on Twitter. Certainly looking bearish on the weekly time frame and the daily time frame. So that's the direction I'd be looking in. I'd be scouting for a lower high to form. Our last little bounce attempt topped out at 1715. So if we top out anywhere below 1715, it's just continuation of this lower high pattern. So CMG, keep an eye on these bulls to break the lower high daily pattern. SKX in a tight range between the middle Bollinger Band resistance and the 50-day support. NKE tightening range, higher lows and lower highs. And you could even draw some trend lines to help do that real quick to wrap this video up. I would be hitting the top of the real body of the bull candlesticks and the bottom of the real body of the bear candlesticks. I'd probably put it right there. Tightening range to form, but personally, I like using the price action more than the trend lines. Definitely a lot more clear. The trend lines, as I say, they give us a bit of a heads up on which direction to be looking at for the price action to break, but price action rules all, in my opinion, as opposed to trend lines. So we'll be keeping an eye on all of it, and we'll check back in tomorrow.